So we're a couple of minutes in, so we're building the amount of attendees. So I'd say we can make a start. So before we begin, just for everybody who's on the video now, just to introduce Justin and Matt. Justin is the co-founder and chairman of Regionally, and Matt Hawkins is the CEO of Cudo Ventures. So Cudo Ventures is our first investee client, and they're a Bournemouth-based software as a service firm. So the purpose of this event is we wanted to create a follow-up event for questions that have been asked as a follow-up to a video that we did a couple of months ago. So I'll post a link to that video in the chat here. So for anyone that hasn't already seen that, then you can watch it there. And then we've just basically really wanted to ask Justin to ask some questions of Matt. So if anybody has any other questions as well that you want to be answered during this event, then please do post them in the chat box to the right there. So that's everything that I need to say. If we can try and keep it to around 30 minutes, then that would be excellent. But we're fairly flexible with the time. So we'll go ahead with what we can do, and we'll be recording it as well. So if anybody needs to drop out at any point, then you can watch it afterwards as well.
Freya, thank you very much. Okay, let's take on from there.
From now, shall I leave it to you, Justin? Brilliant. Thanks a lot. Good luck today.
Everyone falls asleep. Right, now Matt, last time I saw you was down in glorious Bournemouth when it was, I have to say, thrashing it down with rain, thoroughly miserable day.
Yeah.
But owning it perched up, it was actually, apart from a rather good Korean lunch, was actually just how you described Cudo and the business. And we filmed that video that day. And by the way, if anyone wants to see that video, it will be on the website for you to see. But Matt, could do me a favor, just give me a little short overview of what Cudo is now, what you're planning to do.
Yeah, sure. So Cudo has essentially been set up to make use of the world's spare computing capacity. So my previous business was a data center and cloud company. We ended up providing about 1% of the UK's infrastructure, ended up in 50 data centers, actually built the largest data center marketplace in the UK. And while I was running that business, I just saw huge amounts of waste of IT capacity. So on average, data centers, cloud platforms, they've got anywhere between sort of 30 to 50% spare capacity. Internet backbone providers, anything up to about 80, 90% capacity. And then, so
this is spare capacity not being used. Now, those are quite big providers, but you also said it applied to actually smaller providers as well, sort of PCs and things like that.
Yes, yep. So PCs, consoles, any device that's sat at home. Typically, the physical devices more than the laptops. They're just plugged in, left on most of the time, and that's a lot of computing capacity that people have bought, just sat there, and on average, it's only used at home about 30% of the time. So we've got the spare internet and spare computing that's paid for.
So to ask a stupid question, how do you access someone's computer without them actually know? Well, obviously they know it, but I mean, they obviously don't see you fiddling around with my computer at night. What actually happens?
Sure. The best way is to compare it to kind of like a Dropbox or other ones where you're used to sharing a bit of your file storage. What we do is we have access to a small amount of the computing capacity while it's not being used. So it's in an environment, and you just select when you want to make that available. So that can be whenever you're not using the machine, and it will just monitor for activity. There's people that are actually buying dedicated hardware and machines just to run this software, because it obviously makes money for them. Right. But yeah, it runs as an application that sits on your desktop essentially, or sits on a server.
So people are quite literally just buying kit so that you can use it for the application. They don't use it necessarily for anything else.
Yes, yeah, we've got quite a few home users doing it now, and data centers and service providers are now doing that as well.
So for companies actually on those sort of data centers, actually presumably it's actually quite profitable for them to be able to have this amount be used, and of course they presumably you'll then pay them for that.
Yes, yeah, we pay them for the spare capacity, and if it's dedicated hardware, they've usually still got spare office space or data center space where they've already paid for that environment, or otherwise if they've got spare computing capacity anyway, then it's ideal to run it on that.
And you also said it applies down to individuals as well, with even with their games consoles and things like that, and presumably then giving them, albeit fairly modest income as a result of it.
Yes, yes. So we will be releasing a console version. One of our board of advisors, we work really closely. He's actually the ex president of Sony Entertainment, ran PlayStation 1 and 2. So we have been working with them, and the consoles are ideal because they're exactly the same, especially, you know, the new PlayStation 5 and Xbox that have come out. They're sat there doing nothing still the majority of the time, but it's an expensive device. So if it could pay you for your games or pay back for the hardware that you've bought, you know, that's the ideal solution.
Can you give me an idea of what an individual could potentially have if they have a PC and an Xbox or whatever it is? What sort of income could they get off that?
Yeah, so the good comparisons are the new NVIDIA graphics cards and AMD cards that actually came out last month. Yeah. And they're currently producing around $80 a month really? In revenue. Yeah. The new consoles they're not quite as powerful, but they're producing about $60 a month, and that's based on all the time. So you know, you have to reduce that down based on how much you don't use your device. But some people are actually buying the cards and just putting it in as a second card because it will just make money for them, you know, and then they can still carry on using their machine as normal.
And it's just going on in the background for them.
Yes.
Yeah. Okay, just go back a bit. Matt, tell us a bit about yourself and also some of the colleagues, because you've got some great directors there with you on the team. So a bit about you and a bit about the team, please.
Sure. Yeah. My history has always been tech and business, all the way down from, you know, when I was younger, a teenager, I had software and computer businesses selling in magazines and online. And my first major business was.
So are you the original geek then?
Yes. Yeah. I was programming when I was 5. So yeah.
5?
Yeah. It's in the blood.
What did you do when you were 5? Well,
it was a quiet estate, cul-de-sac that I lived on. Yeah, and then through college and uni, I had businesses selling computers and magazines, and then 2000 started my last major business, and that was before there was cloud. So there was no, you know, cloud providers, no Amazon, Google, or anything like that. But we saw the adoption, or I did of just the growing internet and people wanting to get online. So it was really difficult back then. You used to have to go to a data center and a network provider, and then someone else to buy your infrastructure. And it was actually really difficult. And I had to do it because one of the sites that I was running became one of the busiest in the UK. So I had to go through this process myself, and I realized how difficult it was. And I thought everyone else must be doing the same. So I went back to the data centers, packaging it up, and they started selling more business. And I replicated that all around the UK, Europe, did some in the US, and that grew. We were one of the biggest providers in the UK. As that grew over 16 years around that.
And what about the team you've got around you as well? Because you've got quite a bit of experience there as well, haven't you?
Yes. Yeah, we've got some really good team members. My chief revenue officer, he built a SaaS business, actually sold that about 6 years ago, and has since been advising companies on how to, SaaS companies specifically, how to go through the growth phase from up to 10 million annual recurring revenue. Yep. And that's been his specialism. So he joined about 4 months ago, which has been really good. We've got team members from different development areas that used to scale up data solutions for Vodafone and other platforms. My COO previously ran a kind of a fast-growing fintech business. And then I've got a number of my CTO is the CTO for my last company. And I've kind of got some of the best individuals from that last business. So it's a really good team. There's 26 of us at the moment.
Okay, and it's good to have a team that you've had to work with for some time. At least you're all still speaking to each other. That's a good thing. So what's the business doing now?
From a growth perspective, then we have been in development. We launched it in November 2017. We actually launched the enterprise version of our software in June this year. At which point we were doing 6K turnover because we've been in development mode before then. Since then, last month we did 140K, so it's scaling up quite quickly. Revenue generated actually on our software was just about 1.2 million. And that's scaling up quite quickly. So, sorry.
And when do you expect to become profitable?
Q1 to March next year. So we've got some big launches. AMD are actually launching with us. They're rebranding our software and going to market. We expect that to bring about 2 million users onto the network. We've got some other big games companies using our software, and they're launching that shortly. And another one called Ultra, which we did a press release about a week ago. That should bring us about 2 million users. So our route to market kind of on the retail side is through large brands. And then we've been signing up large data center providers, large kind of farms, graphics card farms. We focus on the computing side. We focused on graphics cards and bandwidth, because that's the biggest cost and differentiation between traditional hyperscale cloud. So it's 300 times more expensive to buy bandwidth on Amazon than the wholesale cost as a service provider, as an example.
So having built this up, what protects you then? Because it'll stop someone else coming in with the same idea.
Yeah, I mean, one of it is we've been working on land grab, and that's partnering with these big brands. AMD, we're the only one working with AMD, and there is only 3 brands in the computing space, primary brands: AMD, Intel, and NVIDIA. So we've cornered, and AMD now sell more chips than Intel each month. Their new graphics cards are now equal to NVIDIA's for the first time. So it's pretty much the best brand to partner with there. We have also, spent a lot of time building this technology. It's a mixture of IP that we've built versus a lot of open source projects. It's well in excess of, probably actually in excess of 100 core projects, but probably about 200 to 300 actually open source projects to pull this together as a platform to work across all these solutions. Technically this wasn't possible 4 years ago, so we've kind of been pulling together the best of everything to do that. You have to have had experience in doing this.
Sure.
You have to have built scale out cloud and backbone infrastructure around the world to know how to do this in the first place. So, and there's not a lot of companies that did that. We were one of the biggest in the UK, and there's only a handful around the world that have actually done that. So it's quite there's a small market of people that have got the skills to do it, I would say.
Okay, and so who are your current shareholders? Obviously you're involved in it, but who else is?
Yep, they have primarily been angels, smaller funds, and syndicates as well to date. Actually we've historically, because the raises haven't been massive, then we've got VCs. We've got quite a lot of directors from VCs who have invested personally, rather than through the VC, because we weren't big enough for their funds.
Right.
That they want to spend at least 2 million investment, for example. So they decided to invest themselves because they believe in it.
Okay. So you're going this time for a raise of $500,000. What do you want to use that for?
Yeah, so it's primarily for operational costs. So as you're seeing, the revenue's growing really quickly now. So it's operational costs to extend us past the break-even point.
Yep.
So what we wanted to do was, in this round, we were raising enough so that we had a substantial reserve in place as well, if development took any longer.
And then in due course, coming back for another round for growth. What's that? In a couple of years, years time?
Yeah. So we've had. So this has actually been done as advanced subscription agreement, which provides a discount on the next round, 20% discount on the next round, and then we have a long stop of the value of our last round, which was the 15.5 million. So for any reason we didn't, and that's a 6-month long stop, so it's EIS eligible. If for any reason we didn't raise in that round, then you'd still convert at the price of the last round. And then there is a cap of 27 million. And the reason we've put that in is to protect the investors in this round, because we have had AMD and a number of other hardware vendors and large providers said that they're interested. As strategic. So the next round's purely strategic because we're not needing it from an investment perspective. This is actually going to get us growth into the market.
Okay, and as a result of this, are you expecting all the team to stay with you as well? None of them cashing in at this point?
No. Everyone. So naturally, we've got share options for everybody, 10% share options for the team, but everybody's on exit only shares. So the idea is, and everyone's on the same journey. We're all looking to, we've all got the same passion. There's two sides to it actually. One is to make better use of infrastructure that's out there. There's actually now more CO2 spent building the server and the data center it sits in than the lifetime of running a server. So if we can not have to build so many of these servers up the front, then it has a massive CO2 positive effect, especially a lot of the providers who are carbon neutral as well.
And I think this brings into an interesting point with your business, because to use the trendy letters of ESG, environmental, social and governance, actually you've got quite a strong issue on that, not just in terms of being able to manage this excess capacity and not actually waste the CO2 use on that, but also in terms of actually what happens to some of the money or the alternative options that people have when they're actually receiving money from you. You're actually linking it into some charitable work.
Yes, yeah. So one of the main reasons actually is to make better use of this IT, and that's one, do it to make sure it's carbon neutral, but also to enable people to donate those resources to charities. And they can do it in one of two ways. They can either donate the funds that get generated from it to charity, or actually they can donate the resources itself. So if they want to donate for COVID or genome sequencing, cancer research, things like this, they can donate the resources. So they have a sort of choice either way. With that amount of compute that's out there, it can make a substantial difference.
That's a very clever way of doing it. It's almost painless charitable giving. Although I expect certain people will be quite happy to have the money instead, but at least it gives them the choice and the alternatives to be able to do so. So tell me then, you've got open choice here. What sort of investors do you actually want to have?
Yeah, I mean, the ideal investor is people with experience in AI, machine learning, large data analytics, or cloud computing, really. That's especially distributed computing solutions. So that have either contacts in the space, work with companies or startups that have cost bases there as well, because the cost base is in excess of 10 times cheaper than having to use the hyperscalers. Basically technology experience, domain experience, or working with other parties that would be interested in partnering with us.
So you'd be looking to actually participate with them to get them more involved in the business.
That would be fantastic. Yeah, yeah, definitely. Or people that have a passion in this and the renewable energy side as well.
Okay. And in terms of an investment period, you obviously don't want, well, it's not going to be a period issue for day traders here, but for people willing to invest, what, 3-5 years, that sort of period?
Yeah, I mean, if you look at kind of the growth stage that we're on, I would say, 3-5 maximum. But if we continue the growth levels that we are, which looks like we are, then we become a big player within about 3 years. We'd actually become big within 2. And we accelerated past this in my last company. So we know how to do this. The advantage is in my last company, we were physically tied to our infrastructure. Now we've got the whole of the world's infrastructure, so we pretty much scale as quickly as we can bring on users onto the platform on either side. We've removed all the barriers of scale, so that's when we become very attractive. But we would look to sell to someone that's going to enhance and grow us, like an AMD, someone like that, rather than pure competitor that would do the opposite essentially.
So just be clear, the medium-term goal would be to actually be bought by someone. And that would then enable you to go on to the next stage or your next adventure.
It would either be that or an IPO. So
don't do it that way. So in terms of, it's always I think it's worth knowing, because as an investor, I always love putting my money into exciting businesses. I also like to know I've got the chance of actually getting some money out of those exciting businesses. So as investors, what sort of opportunity would you expect for them to be able to see some return on this? Which they can come out. There'll be that, I presume that sort of sale event could be the moment when you could actually see those people being able to cash in.
Yes. So, if you look at based on our current forecasts, if you go in at the post-money valuation of the last round, we would expect in 3 years' time to be about 30x. If it's... Pardon?
Impressive stuff.
Yes, yeah. Or if it's at the cap, then it's more like, just around 15x over that period.
Matt, it's a good story, but where are your risks? What are the things that wake you up at 3 o'clock in the morning in a cold sweat? Or don't tell me that never happens to you.
I get up early instead.
Right answer.
Actually, the biggest challenge is getting enough of the skilled people in to keep up with the growth. That's actually the biggest challenge. You know, we know the space very well. It's actually getting the skills in to be able to develop quick enough.
And you don't actually need those people around you in Bournemouth, do you? Doesn't really matter where they are, does it?
No. That has been one of the benefits, you know, of the effects recently, is that everyone's used to remote working, and it's enabled us to open that domain a lot wider, which does make it easier. You know, we have now started picking up really experienced people quicker than we would have beforehand, because previously we were just looking locally. The advantage of Bournemouth is, you know, we're not playing London salaries.
That's true. Yes, all right. Or London office costs.
But
equally, of course, it does make it more difficult then get to like culture and messaging across when you're just having to do it across on Zoom calls and such like the entire time.
Yes. Yeah. But I think it's where everyone's going through the same journey, really, aren't they, at the moment? But it's becoming the norm, and, you know, businesses, and we've adapted to it. So it's then all about creating communication and getting people to talk, you know, regularly, you know, weekly or daily stand-ups with the teams, and just keeping everybody engaged.
And how do you plan to communicate with investors?
So we provide a monthly update to everybody, which gives a full update of kind of the main opportunities, what we've been working on, any help that we could do with, and then also we also have you know, just a full update on financials where we are. So you know,
And the story for Cudo is going to be a growth story. I'm not expecting you to start paying any dividends anytime soon.
Well, at the moment it's growth. Yeah. So, you know, like I was saying, in the last 6 months, we've done about 15 times growth. So it is scaling quickly. But once we're into profit, you know, naturally, because we aren't, you know, we don't have CapEx costs, we're using everyone else's infrastructure. It means that we become cash generative quite quickly next year. So we would be providing dividends then.
Matt, I think it's a very exciting story, and certainly very different, I think, from investors, on the basis that you're actually using other people's equipment to be able to make money for yourself, but also make money for them, which I think is remarkable. And I think the ESG angle of it as well, in terms of being able to manage the carbon dioxide issue, I think is actually a good story to be telling as well. A practical one, as opposed to some of the more theoretical ones you hear. And I have to say, I do like the options for people to be able to divert to charitable causes or not, depending on what they want to try and do. I think this gives a great range of flexibility overall. Matt, thank you very much indeed for sparing the time for us today. And I'm sure people will probably want to know more in due course, and I hope to have a chance to actually come back and ask you some more questions without actually bothering more time. In the meantime, I'm going to leave you to it. I'll hand you back to Freya. Matt, have a good weekend, and many thanks for your time.
Thanks. Good to speak to you. Speak soon.
Thanks, Justin, for asking those questions. I think we had some really interesting questions and some great answers as well. So during this event, we've had a couple of new questions.
Sure.
The first of which, I know one attendee wanted to understand a bit more. How does one install the software, or how does Cudo work if you want to actually make it work on a device that you have?
Yep. So currently it's supported on Windows, Linux, and Mac. You can download it from the website, so it'll run either on a machine that you're already using, or it'll run in the background. Well, actually, or it will run dedicated, you know, if you've got dedicated hardware on there.
Great. And another question, just to fit it all in before the end of the event. So a question from a member that can't actually make it today. So what happens when there is a surge in demand for Cudo power? can the devices that have the software installed, i.e. an Xbox, be turned on automatically?
So if they've got it configured to purely run idle, then the machine, if it's in standby, then it won't turn on the Xbox. But if the machine's actually on, and connected, and it's waiting for commands, then you can enable that. That's down to the application itself. And then on PCs, they're left on anyway on those machines.
Yeah, and I think that's a really interesting question, actually. And then one final question. If any of the attendees now as well want to ask another question. Oh yeah, we've got a few more coming in. So another one, another question from another member that can't make it. How secure is my personal data and information on devices with the software installed?
Yeah, so we use the same technology that's used on the cloud providers. So, Amazon, Google, these other platforms, which is a virtualization technology. We actually use 3 layers of it. So, we provide multiple layers of protection around it. And that's using other ones out there, used in a different form. That's been installed over 15 million public devices, and it's run on all cloud platforms, and it's not been broken before.
That's really interesting. So I think especially in 2020 with everything that's happened, it's very important to make sure that your data is protected, isn't it?
Yeah, exactly.
So another question, which looks like it could be the final question. How much will an individual make from Cudo compared to how much extra they would spend on energy?
Yeah, so if it's a modern device, as in less than about 3 years old, typically the cost of electricity is about 25%. 20%. If it's doing some kind of more expensive computation like AI, things like that, then the cost can go down to about 5 or 10%.
Brilliant. Great. Thanks for that, Matt. So as far as I can see, we don't actually have any more questions coming in. But if you do have any other questions or you'd like to speak to Matt afterwards, I'm sure we can put you in touch afterwards. And we have recorded this event as well, so I'll create a YouTube link to share with everybody. Oh, we just had one last question coming in. How many types of cryptocurrency does the device use?
Yes, awesome. So there's around 10 that we have access to at the moment. And the software can pay out in cash. It can pay out in gift vouchers. So AMD, for example, are using gift vouchers to get paying their users in. There's a crypto version of the software, and that pays out in the different cryptocurrencies. And then the version that's used by data centers, they get paid in cash. So, just as they would for normal. So we've had, on the crypto version, we've had about 150,000 users have signed up so far. The AMD one, which is, I mentioned, is just about to launch. That's about 2 million users they're expecting from that launch. And then the data centers, they naturally sign up themselves.
Brilliant. I hope that answers your question, Michael. So on that note, we've got another question. I don't know whether we can squeeze it in. Let's try and just squeeze in this last question before the end. Is it only based in the UK, or is it open to expand in Asia and other parts of the world?
Yeah, so the UK is actually only about 2 or 3% of the market for us.
Really?
We've got we're launching with Ultra, that I mentioned. They have 80 million users in China, and our software is going to be powering that software over there. So China is a really big market for us. We've partnered with one of the main hardware manufacturers called Sapphire, and we're working with them at the moment. And we're through that partnership. There's 110,000 internet cafes in China, for example. At the moment, they're equivalent of the bars in the West, and most of the time, because of COVID and other reasons, those devices are sat empty, and internet cafe is anywhere between sort of 50 to 200 devices. So you've got millions of machines which are sat there doing nothing. But our software's already started monetizing that infrastructure, so they can pay their rent, they can pay their lights on using our software when they haven't got any people in it. So Asia is actually a really big market.
Yeah, that's fantastic. I mean, why not make the most of those when they're not
at
the moment?
We're translated into 12 languages at the moment, and we're increasing
Brilliant. That. Oh, that's fantastic. Well, I think we are going to have to round up now just to keep it at that 30-minute length webinar. So Matt and Justin, thank you so much for that. I think we really answered some really interesting questions there. And again, to the attendees, if you do have any more questions, then please do just send it over to me afterwards. I'll send you all a follow-up email with some more information about Cudo as well. So hopefully you should all be clued up after that. So
Freya, thank you very much indeed.
Thanks a lot, and speak to you all soon.
Thanks, everyone.
Thanks,
Cheers.
Matt. Thanks, Justin. Bye, everyone.
Bye.